Your support helps us continue bringing responsible, fact-based analysis of the Iraqi dinar, global currency markets, and the economic developments that influence exchange rates around the world. Now, let's examine today's important international currency update and understand why movements in the US dollar, even when they involve other Asian currencies like the Vietnamese Dong and the Japanese yen, can still provide meaningful insights for those who closely follow the Iraqi dinar. Today's report centers on developments in the foreign exchange market, where the US dollar weakened against the Vietnamese Dong in Vietnam's unofficial or black market exchange segment. According to the latest available information, unofficial exchange points were selling the US dollar approximately 0.15% lower at around 26,280 Vietnamese Dong. Meanwhile, Vietcombank, one of Vietnam's largest commercial banks, maintained its official exchange rate at approximately 26,490 Dong per US dollar without making any changes. At first glance, some viewers may wonder what a currency movement in Vietnam has to do with Iraq or the Iraqi dinar. This is a fair question, and the answer lies in understanding how global currency markets operate. Modern foreign exchange markets are deeply interconnected. A movement in one major currency, particularly the US dollar, often reflects broader investor sentiment, central bank expectations, international capital flows, and changing economic conditions across multiple regions. Because Iraq's official exchange rate is closely linked to the US dollar through a managed exchange rate system, developments affecting the dollar deserve careful attention, even when they originate outside the Middle East. The second major part of today's report focuses on Japan. Globally, the US dollar weakened against the Japanese yen after traders reacted to expectations that Japanese authorities could intervene again to support their currency. The dollar fell approximately 0.8% against the yen after having declined by roughly 2.4% the previous day following official intervention. To understand why this matters, it is important to appreciate the significance of the Japanese yen within the international financial system. The yen remains one of the world's most actively traded reserve currencies. It plays a major role in international finance, investment portfolios, and foreign exchange trading. When the yen experiences unusually large movements, global investors often adjust positions across multiple currencies, including the US dollar. These adjustments can influence broader market sentiment well beyond Japan itself. Japan has experienced prolonged weakness in its currency because interest rates remained extremely low for many years. Investors frequently borrowed yen at low interest rates and invested in countries offering higher returns, a strategy commonly known as the carry trade. This process increased selling pressure on the yen while supporting demand for higher-yielding currencies and US dollar assets. Recently, however, expectations have begun to change. Analysts increasingly expect the Bank of Japan to continue raising interest rates, with some forecasts suggesting rates could reach approximately 1.25% by the end of the year. While that level remains relatively low by historical standards in many countries, it represents a significant policy shift for Japan after years of exceptionally accommodative monetary policy. Whenever markets anticipate higher interest rates, investors reassess their expectations. Higher Japanese rates could encourage capital to remain within Japan rather than flowing abroad. As a result, demand for the yen may increase while demand for the dollar may soften, contributing to fluctuations in global exchange rates. Now let's connect these developments back to Iraq. The Iraqi dinar operates under a managed exchange rate framework administered by the Central Bank of Iraq. Unlike freely floating currencies that move continuously based on market supply and demand, the Iraqi dinar's official exchange rate is managed through monetary policy foreign currency auctions, reserve management, and broader economic planning. This distinction is extremely important because viewers sometimes misunderstand international currency headlines. A weaker US dollar against the Vietnamese Dong or the Japanese yen does not automatically mean the Iraqi dinar will strengthen tomorrow. The relationship is much more complex than that. Instead, these developments should be viewed as indicators of changing global financial conditions rather than direct predictors of Iraqi exchange rate movements. For Iraq, one of the most important considerations remains the strength and stability of its foreign exchange reserves. Since Iraq receives the majority of its government revenue from oil exports denominated in US dollars, fluctuations in the value of the dollar against other international currencies can indirectly influence purchasing power, import costs, and broader financial planning. Suppose the dollar weakens broadly against multiple international currencies over an extended period. In that situation, countries holding large dollar reserves may evaluate how those reserves perform relative to other reserve assets. However, such portfolio decisions generally occur gradually and involve numerous economic considerations rather than immediate reactions to short-term market movements. Another important aspect involves imported goods. Iraq imports products from many countries across Asia, Europe, and neighboring regions. Exchange rate movements among the dollar, the yen, and Asian currencies can influence the cost of machinery, industrial equipment, automobiles, electronics, and manufacturing inputs purchased from those countries. If the dollar weakens against currencies used by Iraq's trading partners, imported goods from those countries could become relatively more expensive when priced in dollars. Conversely, if the dollar remains comparatively strong against certain currencies, imports from those regions may become relatively less expensive. The overall effect depends on numerous variables, including international commodity prices, shipping costs, supplier contracts, and regional trade dynamics. Today's developments also remind us of the critical role played by central banks. Japan demonstrated that monetary authorities can intervene when currency movements become excessively volatile. Central banks around the world possess various policy tools, including interest rate adjustments, liquidity management, direct foreign exchange intervention, and communication strategies designed to influence market expectations. The Central Bank of Iraq also utilizes monetary policy tools appropriate for Iraq's economic structure. While Iraq's policy framework differs substantially from Japan's, both institutions share common objectives that include maintaining financial stability, supporting confidence in the domestic financial system, and promoting orderly market conditions. For Iraqi dinar followers, understanding the role of central banks is more valuable than focusing exclusively on daily exchange rate headlines. Sustainable currency stability is typically built upon sound monetary policy, adequate foreign reserves, fiscal discipline, banking sector development, and overall macroeconomic stability. Looking more closely at Vietnam, the difference between the unofficial market rate and the banking sector rate highlights another important concept familiar to many emerging economies. Official exchange rates sometimes coexist alongside unofficial market activity, where prices can differ based on supply and demand conditions, liquidity, and market expectations. Iraq has also experienced periods in which official and parallel market exchange rates diverged. Over time, Iraqi authorities have introduced various reforms intended to narrow these differences through banking modernization, enhanced compliance measures, improved foreign currency distribution mechanisms, and stronger oversight of financial transactions. Because of these similarities, developments in Vietnam provide useful examples of how emerging economies continuously work to improve exchange rate stability while balancing domestic economic objectives. Another interesting feature of today's report is investor psychology. Financial markets are driven not only by current economic data, but also by expectations about future policy decisions. Traders buying or selling currencies often react before central banks actually change interest rates. In Japan's case, expectations regarding additional rate increases have already influenced market behavior. Investors continuously evaluate inflation data, employment trends, economic growth, government policy, and central bank statements before adjusting portfolios. Similarly, investors monitoring Iraq pay close attention to indicators such as oil revenues, fiscal policy, banking reforms, inflation, foreign reserves, infrastructure investment, and monetary policy decisions. Rather than responding to rumors or speculation, professional analysts typically examine measurable economic indicators that provide evidence regarding long-term economic performance. One important lesson from today's developments is that currency values are rarely determined by a single event. Exchange rates represent the combined influence of thousands of economic decisions occurring simultaneously around the world. Interest rates, inflation, productivity, government spending, geopolitical developments, trade balances, investment flows, and market confidence all contribute to currency valuation over time. This complexity explains why responsible financial analysis avoids simplistic conclusions. A weaker dollar today does not automatically create a stronger dinar tomorrow. Likewise, a stronger dollar does not necessarily imply long-term weakness for every other currency. Each country's economic structure remains unique. For Iraq, oil revenues continue to play an especially significant role because they provide the foreign currency resources supporting public finances and reserve accumulation. Consequently, developments in global energy markets frequently exert a more direct influence on Iraq's economic outlook than isolated daily fluctuations involving unrelated currency pairs. Nevertheless, broad trends affecting the US dollar remain relevant because of Iraq's monetary framework and international trade relationships. Looking toward the short term, today's currency movements primarily reflect changing expectations regarding Japanese monetary policy and market positioning. Investors will continue monitoring additional comments from the Bank of Japan, inflation data, economic growth indicators, and any further signs of official intervention. For Iraq, these international developments may contribute to broader global financial conditions, but domestic policy decisions, fiscal management, and banking sector reforms remain the primary drivers of Iraqi monetary stability. In the medium term, continued normalization of Japanese interest rates could gradually reshape international capital flows. Investors who previously favored dollar-denominated assets because of interest rate differences may begin diversifying more actively if Japanese yields become increasingly attractive. Such shifts generally occur gradually rather than overnight. Financial markets often require months or even years to fully adjust to evolving monetary policy environments. Meanwhile, Vietnam's exchange rate developments illustrate how emerging market economies continue balancing external pressures while maintaining domestic financial stability. Countries operating managed exchange rate systems must consistently evaluate reserve adequacy, inflation trends, import demand, export competitiveness, and investor confidence. These same principles also apply broadly to Iraq, although the specific policy tools and institutional frameworks differ. For long-term Iraqi dinar observers, perhaps the most valuable takeaway from today's report is the importance of viewing currency markets through a global lens. No currency exists in complete isolation. The US dollar remains central to international trade, commodity pricing, reserve management, and financial markets. Consequently, developments affecting the dollar naturally attract worldwide attention. However, Responsible analysis requires distinguishing between global background trends and country-specific policy decisions. Iraq's long-term monetary outlook will continue depending primarily on domestic economic reforms, banking sector modernization, fiscal sustainability, prudent reserve management, diversification efforts beyond oil, and the credibility of monetary institutions. International currency developments provide useful context, but they do not replace careful analysis of Iraq's own economic fundamentals. Another encouraging aspect for financial observers is the increasing transparencies displayed by central banks worldwide. Markets today receive more frequent communication regarding monetary policy objectives than in previous decades. While uncertainty always remains, investors now have greater access to official statements, economic forecasts, inflation reports, and policy guidance. This improved transparency helps reduce unnecessary speculation and allows market participants to make decisions based on publicly available information rather than rumors. For Iraqi Dinar followers, adopting a similar evidence-based approach remains beneficial. Monitoring official announcements from Iraqi authorities, economic indicators, banking reforms, fiscal developments, and international financial institutions provides a stronger foundation for understanding long-term trends than relying solely on social media speculation or unverified claims. Today's report also demonstrates the importance of diversification within the global financial system. Different economies experience different stages of the economic cycle simultaneously. While one central bank raises interest rates, another may pause. While one currency strengthens, another may weaken. These differences create continuous adjustments throughout international financial markets. Such adjustments are normal features of an interconnected global economy rather than indications of systemic instability. Professional analysts therefore focus not only on individual daily movements but also on broader trends developing over weeks, months, and years. In summary, the US dollar experienced modest weakness against the Vietnamese Dong in Vietnam's unofficial market, while official banking rates remained unchanged. At the same time, the dollar declined against the Japanese yen as markets anticipated additional policy actions and potential intervention from Japanese authorities. Expectations that the Bank of Japan may continue raising interest rates contributed to changing investor sentiment and broader currency market adjustments. For Iraqi Dinar followers, these developments should primarily be understood as indicators of evolving global monetary conditions rather than direct signals regarding Iraq's exchange rate. Iraq's managed exchange rate framework means domestic monetary policy, foreign exchange reserves, banking sector reforms, fiscal management, and economic fundamentals remain the principal factors influencing the dinar over time. Global currency movements certainly provide valuable context, but careful analysis always requires separating international market trends from country-specific economic realities. By maintaining this balanced perspective, investors and observers can better understand how worldwide financial developments interact with Iraq's evolving economic landscape without drawing conclusions unsupported by the available evidence. Thank you for watching today's analysis. If you appreciate responsible, factual, and balanced coverage of the Iraqi dinar and the global economic developments that may influence Iraq's financial outlook, please subscribe to the channel and like the video so you never miss future updates. As always, this content is provided for informational and educational purposes only. It should not be considered financial, investment, or trading advice, and viewers should conduct their own research and consult qualified financial professionals before making any investment decisions.